So in today's video, we're looking at the Wyckoff accumulation pattern. Is it now invalidated or not? We're also going to look at the macro landscape for Bitcoin as it's looking super bullish, probably more bullish than ever, whilst we are even in a short-term bearish trend. So does this just represent a great DCA opportunity into Bitcoin? If you enjoy the content in today's video, make sure you subscribe to the channel and also check out my Patreon link down below to directly support the channel. Let's jump into this one. So after another sharp pullback yesterday, the Fear and Greed Index is now showing a 22, up from 20 just yesterday. If we look over the historical context of the Fear and Greed Index, you can see we are in an area down here in the low 20s that we've revisited at significant times. This was the coronavirus March 2020 drop. And of course, back in early 2018, we also revisited this area for quite some time during the end of the last bull market. So periods when we're down here in the low teens or even 20s, these have often been good times to DCA into the market, especially if your time horizon is longer term and you believe in this industry's growth. You're better off accumulating during these times rather than FOMOing in near the tops when everyone's super bullish and crypto is the in trend. It seems there's a lot less market participants right now, and these are often the times that represent the greatest financial opportunity. So personally, continuing to DCA into a position with Bitcoin, I'm going to do weekly purchases and not spend all my funds at once. I don't want to run the coffers dry just in case there is further downside ahead. But I do believe in the long-term thesis for Bitcoin, and these price ranges will not be here forever. Now let's have a little look at the charts. Yesterday, clearly we dropped down quite a bit, wicking down to the low 30K region. A lot of bearish, well, very, very bearish sentiment on Twitter at that point. And now we've started to make a move back upwards from yesterday. So we're starting off Sunday with a new green candle here and pushing towards the $33,000 level. We went as high as 33,400, maybe 33.5 just this morning. But evidently we are following a downtrend still, and we have not really significantly broken out of this region. So approaching with caution is clearly the best thing to do. We did see some really crazy and insane shorts. So BTC shorts hit an all-time high here, around 25,000 Bitcoins. You're talking like $700 billion. If we actually pull this out onto the hourly, you can see it a lot more clearly. It appears a whale on Bitfinex was absolutely smashing the shorts here, all the way up to around 26,000 Bitcoins worth, somewhere in the region of $700 billion. And of course, the market reacted by dumping down. As you can see, this whale is now cashing in on those shorts. And since this has been happening, the price of BTC has started to go back up. But you can really see that this market is heavily manipulated by some big players. This tweet here sums it up nicely. Dear noobs, BTC is not naturally going down. It's being pushed down via whales placing spoofy sell orders on exchanges to make noobs and risk managers sell to buy back lower, in quotes. They are stealing your bags and will make you buy back at a higher price. So as those shorts started to pile in, the BTC price started to react as you would expect. So these whales leverage big shorts, they then push the prices down, cause capitulation, weak hands sell, and they buy back cheaper. They then go and close their shorts. But this is a pattern we're starting to see emerge as they're gaining more and more BTC and getting even wealthier. This could be something that does continue, which is not nice to see as a market participant when you can see clear market manipulation occurring. Now into some Wyckoff accumulation here, and we're going to see a few different charts because people have been mapping this over different time frames to kind of suit the bias and try and make it match up perfectly. So the Martini guy says here, the Bitcoin Wyckoff is the weirdest formation I have ever traded. How is it so accurate? This is on the 10-hour chart here. Someone's mapped this directly over, and it does appear to follow the Wyckoff accumulation quite nicely here. However, if you then go and watch Rect Capital over here, who's a go-to of mine for TA, he says that Bitcoin failed to turn the 33K level into support, and has invalidated the series of higher lows it formed since the supposed Wyckoff spring from 29K. The idea of the Wyckoff accumulation range itself has therefore been invalidated. So he was suggesting that after the spring, it needed to come up and then retest this 33K line just by here, which it actually broke back through and went even lower again. But again, this is on a different time frame. This is on the 8-hourly chart. And as we've seen with the price action, we've actually now retested 33K just just over the last few hours. So is this validated? Is this invalidated? Who really knows? It does depend on the time reference that you use to actually look at these charts. You can get these things to map nicely onto your bias. And then even more recently this morning, Lark Davis, was this the test after the spring for Bitcoin? So Richard Wyckoff's rules are something we can fall back on here and have a little look at what is said. So Wyckoff's first rule tells traders and investors that the market and individual securities never behave in the same way twice, i.e. no market structure is going to be identical. We can use fractals to get an idea of where trends may take us, but they are never going to be identical. Rather, these trends unfold through a broad array of similar price patterns that show infinite variations in size, detail, and extension, with each incarnation changing just enough from previous versions to surprise and confuse market participants. So consider ourselves surprised and confused at this point. And many modern day traders would call this a shape-shifting phenomenon that always stays one step ahead of profit seeking. So even when we have a spring down to the low 29s, even 28 and change to the ultimate low down here, and we shoot back up and then do a retest, does it have to form the exact pattern from the Wyckoff accumulation for it to still be valid? I will leave that up to you to decide, but clearly in all markets, things are going to change, and we're seeing huge manipulation by whales trying to get lower and lower entries to accumulate more and more Bitcoin. And so I would suggest that following this exact movement is probably not what's going to happen. If a lot of people are expecting it, the likelihood is it's not going to occur. And I think from just observing the price action over the last few days, observing the shorts coming in for both Bitcoin, for Ethereum, there's clearly big players moving the prices at will whilst the market is very, very weak and the volume is low. So I personally expect us to bounce around in the range that we've currently formed between 30, 35K over the next few weeks at least. Because if this is a profitable strategy for the whales, they're going to play this out as long as they possibly can. In terms of the macro perspective here, it's really good to zoom out and see what's actually happening. Well, Bitcoin's been adopted as a legal tender in El Salvador, and 6.5 million El Salvadorans will effectively be able to get a $30 airdrop of BTC if they sign up for their wallet. This is called the Kivo e-wallet, that their president actually went through a full PowerPoint presentation on Bitcoin during last week to show them that it's not a scam, and his outlook for the future and for El Salvador with Bitcoin and their renewable mining. So 6.5 million more wallets potentially coming online for Bitcoin. This is the kind of adoption we like to see. And then across in other South American countries, we're seeing more and more of them turn to Bitcoin as a way of escaping the hold of the US dollar. Paraguay here expected to announce around the 14th of July a proposal to make Bitcoin legal tender. This is a country of around 7.5 million in population. They've got a GDP of around $40 billion. So not a huge country, but what this is definitely a domino effect that is starting to occur. And the more that fall into place, the bigger the overall impact of this. So Uniswap Detective here saying, I refuse to be bearish during this phase of real adoption. And it does seem that South America is really leading the charge here for BTC adoption, but also the wider blockchain industry. So in Bogota, in Colombia, there's now a $2.8 billion blockchain investment plan that companies can apply for. It's called the Bogota Innovation, Technology and Creative Industries Fund. And they're going to be backing companies with as much as $10 to $50 million to implement blockchain tech into their business models. And this is part of a wider $8 billion investment into Bogota to become a smart city. So we're seeing that South America is really pushing forward in what can be described as the fourth industrial revolution with blockchain. So whilst we have very bullish sentiment, you're seeing the likes of JP Morgan flooding Bitcoin and crypto once again. They say that institutions have no appetite for Bitcoin at this price level. However, Andreessen Horowitz raking in $2.2 billion for a third crypto venture would have you believe differently. So this is an absolutely huge VC fund here, and they were rumored to have been collecting around $1 billion, but later reports put this figure at over $2 billion, and they suggest the fund allows them to find the next generation of visionary crypto founders and invest in the most exciting areas of crypto. So could that be DeFi? Could that be NFTs? It's a broader brush than just the Bitcoin narrative that we're seeing from some institutions, and is clearly bullish for the crypto market. So JP Morgan can suck on that one. And then Cathie Wood has bought the dip, ARK Invest buying 1 million shares of GBTC. The dollar valuation of that around $30 million. So ARK Invest, Cathie Wood, one of the very smartest investors out there, backing Bitcoin and buying up the dip. Meanwhile, we know that the money printers will continue to go burr for the foreseeable future. Joe Biden backs a $1.2 trillion infrastructure bill, as clearly the only way out for these governments at this point is to continue spending. So the money printers will continue. So scarce assets, your Bitcoins of the world, are likely to increase significantly as a result of this. We're also seeing Citibank here launching a digital assets unit. So they're going big into crypto. I think it's kind of do or die. They can see the writings on the wall. You either adopt cryptocurrencies or you go out of business. And again, this is a broad brush. It's not just them offering like Bitcoin custody. It says Citi launched a new digital assets group to help clients invest in cryptocurrencies, stablecoins, NFTs and CBDCs. So in terms of the bigger picture outside of the current bearish trend, things are definitely more bullish than they were this time last year or the year before that. We weren't seeing these kind of big players enter the market, but now they're here and they're making a song and dance when they do this. It's almost a sign of, look how progressive we are, we're actually moving with the times and we're going to start adopting crypto. And this video here on Alex Pompliano's Twitter feed here, really worth a watch, where you can see the third richest man in Mexico talk about the demise of fiat currencies. And he says that they're actually a fraud within this. He then points to Bitcoin's 21 million finite supply as a reason why he sees everyone should hold Bitcoin in their portfolio. And the presenter here says to him, if you could pick one asset to hold over the next 30 years, what would it be? Would it be the Mexican peso? Would it be US dollars? He laughs at this and then says that it would have to be Bitcoin. So clearly really wealthy investors here are hot on the trail of BTC. Again, are these the type of players who are stifling prices, making sure that they don't go up too quickly, pushing out the common folk and buying this stuff up all for themselves? Are they scooping up that cheap BTC right now? I certainly think that they are. On-chain metrics are showing that the weak hands are the new investors, which is very unfortunate in this transitionary period as we move towards mass adoption of crypto and Bitcoin. So whilst we're all waiting for the bull to return, I'm sure it will come out of nowhere, just like this GIF, and smack us right in the face. So to round things up, we've got a very bullish backdrop during a very bearish period of time. So this is kind of a painstaking period for the average investor. You're seeing your portfolio amount go down, but you can see where we're heading. You can see the growth that is on the cards, and the kind of market participants that are entering have deeper pockets than we've ever seen before. But the problem here is that we've now let the fox into the hen house with these big institutional players, and we're going to have to deal with the consequences that come from that. And that's going to be some erratic price movements and some big market manipulation. If you enjoyed the content today, make sure you slap a like on the video, drop me a comment down below, and I will see you in the next one. Goodbye.